Hi guys, good afternoon. Today we're going to be looking at why most people don't make money in the forex or commodities market. I've narrowed it down to sort of three reasons why. I'll give you tips to sort of follow along and hopefully make you a better trader. Statistically, only 5% of traders actually turn out to be profitable. I want to sort of dive into why that is the case, why most people cannot make money. So today I'm using the Pip Hunter Bag D just to sort of to show you how it works and sort of stuff like that. But mainly we're going to be looking into the issues why most people can't make money. So firstly, the most important one and probably the easiest to solve is people not having the mental strength to follow their plan. Some people get greedy and then they just cannot follow their plan. They overtrade, and that's going to be sort of the second reason. You always have to stay disciplined in the market. Let's say if you're trading a certain trading plan, if you're not following it, if you're getting into trades way too early, fear of missing out, that's quite a big issue as well, and stuff like that, basically. So if we look into sort of this area of the market, the way I trade, I usually sort of play it off the MA. That's my sort of the way I trade. I use my flip and right indicator, and that sort of ties into this. So that's basically the first reason why people cannot follow their plan. Obviously, it's best to have a good plan to start off with. That's why you guys are in the group, to help you get sort of a better plan, trading plan, so that you can follow it and sort of make money from that. Secondly, I'd say the reason why most people cannot make money is because let's say when someone gets into a winning streak, they start over trading. So the good way to sort of manage that is to have a set amount of trades to allow yourself per day. I set myself out only 4 trades per day. If I'm sometimes obviously I still get a little bit greedy and start trading more than that, but again, that's when I start losing money. That's when most people start losing money. That's why we should sort of keep the daily allowance to 3, 4, however many you want. I know some swing traders have probably possibly 1 or 2 a day. I'm mainly a scalper, so I have sort of 4 or 5 a day maximum. If I start getting over that, then I'm like, okay, I maybe need to stop trading, maybe need to review my trading plan and stuff like that and go from there. Um, and thirdly, sort of premature entries. You find most people enter the trade before the market starts moving in the other direction. So let's say there it's looking like it's about to go up. Most people will just enter it there without any sort of entry signals. And then what happens? The market starts coming down and you start losing money. So, I mean, over there, you can see 2 good bullish signals. So you could enter there, obviously keep your risk to wherever you like the risk to reward ratio. I usually keep that 1 to 1 because I'm mainly a scalper. It just depends on your sort of style of trading. So what I tend to do is usually I go for 2. So 2 candles down, I enter the trade, take my 1 to 1 trade, and I just move off. Obviously keeping the stop loss just above the sort of the previous 2 candles above that. So let's say if I enter the trade there, I'll obviously wait for the second candle to close, keep my stop loss just there, take my 1 to 1 trade, and then sort of just move off. Most people, what they do is as soon as they start seeing the market going up, they think, okay, there's time for a pullback. So most people will just enter there, keep the stop losses just above it. And then obviously what happens is it hits the stop loss and then you get stopped out very quick. Your stop losses are getting hit. You're not making money. That's sort of, I'd say the easiest and the main way to become more profitable is to definitely follow your trading plan, stay disciplined. If you don't have discipline, then what's going to happen is you're going to take trades where you don't want to, but you're just taking it because you want where you don't want to, but you just take it because you do at the same time, if that sort of makes sense. Fear of missing out kicks in. You're like, okay, I need to take the opportunities. You take the opportunity. What happens is premature entry, hits your stop loss, and then maybe after it hits your stop loss, a little bit above, then it comes down. But that's pretty much it. I just want to keep it fairly simple for you guys. So firstly, stay disciplined. Don't enter trades way too early. Follow your trading plan. Don't over trade. Keep it to a minimum. The less you trade, the more likely it is that you're not going to lose money. That's what I found. I know some days I've taken over 20 trades. What happens is I make money to start off with, and I ended up losing it. So keep the trade to a minimum, and obviously wait for the sort of the entry signal. The entry signal could be, for myself, it's the 2 candles. For yourself, it could be wherever you like, wherever you know works for you, wherever the other admins have said that works for them. You just have to figure that out. Trading is very personal. There is no right or wrong way to trade. As long as you keep your risk management fairly sort of under control. So that's what it is basically. Just manage your risk, stay disciplined, keep trading to a minimal. It's a fairly simple way to sort of get better at trading. That's what I found. Obviously, when I started off, I wasn't very disciplined, took way too many trades, and always hoped for the market to make a reversal rather than putting a tight stop loss and knowing that, okay, if it does hit that stop loss, then my trading just the plan just wasn't right. Rather than just opening the trade and just hoping for it to come down or go up. So try that out and then see how that goes for you guys. All right. Thank you. Bye bye.